Hey everybody, it's Pete. Welcome to a new episode of Stocks for Breakfast. I've stumbled there a little bit. Today we're going to talk about losses. We're going to talk about avoiding big losses. I've kind of been hinting at it for a while that there have been far too many people for my liking that have been leaving comments, feedback, emails with the mindset that stocks always come back and it's okay to keep adding to a position or to hold a position infinitely because it always comes back. Well, yesterday it didn't come back. Yesterday was a day where you paid for not having a trading plan. Yesterday was a day where you paid for the false belief, 100% false belief that the market always comes back. Now, it's very easy to look at a chart over months and even years and see, it always comes back. Yeah, it might always come back in the long run, but do you have enough money to sit through it while it's pulling back if the market has a severe pullback? I traded through the internet boom and the crash, mostly during the crash because it was after when I started. I started in April of 2000, traded through the financial crisis, and let me tell you, that was nasty. And stocks did not come back for the better part over a year. So if you're putting on positions right now, and especially if you're putting on positions with size, and it happens to be maxing out your trading account, and you have the thought process that stocks will always come back, I'm here to tell you the market is much, much deeper pockets than you. All you need is 1 week of you not making a decision, especially for some of you that are trading some of these expensive stocks with actual leverage. It's not good. It's not good. And today we're going to talk about how to prevent it. Yeah, that's right. Prevent it. Big losses are 100% preventable, and it's in your control. Last night we had our coaching call. Every Monday night we we go over the biggest challenges, the biggest obstacles, the goals that people want to achieve in the community. And last night was a pretty big, heated conversation about managing winning trades, managing losing trades. My biggest focus last night was learning how to prevent big losses, because we have two big problems right now that we're addressing as a part of the community, which, by the way, if you'd like to find out more about the community and how other people are doing, definitely click down and learn about the boot camp. It's just an amazing 30-day experience. And yesterday, just 1 day of heavy selling in the market saved tens of thousands of dollars just by being in cash or reducing your position. So it's not always just about making money. You have to first learn how to not lose money so you're around long enough to understand how to make money. And anybody who tells you differently has never traded before. Anybody who tells you that you don't need to manage risk first has never traded before, has never quit their job, which I'm not saying you should do, but I have in the past, has never quit their job, put their head on the line and said, I'm going to make my living and pay my bills from the market. Anybody who tells you that managing risk and stocks always come back, managing risk doesn't have to be a priority and stocks always come back, is full of beans. I'm telling you, full of beans. So what we're going to talk about now, and this is a big problem. By the way, if you find these videos helpful, please do me a favor, click down and subscribe. That would be awesome. And if you have any questions, definitely leave feedback and I'll get back to you as soon as I can. We're going to talk about today not only managing the trades themselves, but here's the key thing. Should you have actually even been in the trade in the first place? Think about that. I get so many emails and feedback and comments and new people into the community saying, oh, as soon as I put a trade on, it starts moving against me. What am I doing wrong? Why does this happen to me? Well, it happens to you because you're not paying attention. It happens to you because you waited for too much confirmation for your stock to move in your favor. Now it's up 8 days in a row. You buy on the 9th day when it opens higher, and you're the one that they're selling to. You're the one that they're selling to, whoever bought the stock 8 days ago. We want to get you to the point where you're the person buying the stock 8 days ago, and then 8 days later, 6 days later, 5 days later, or whenever the circumstances change, you are the person that is selling to the other person that's not paying attention, the person who's not watching these videos, and the person who's not educating themselves into how to be a smart stock trader, which we call the smart money. So we're going to actually hop over into a bunch of charts. We're going to look at charts from that are in my daily universe that I watch every day, which, by the way, that is actually a big part of trading as well. It's a very common misconception by, let's just call retail traders, somebody who's not done this in a professional manner. And again, when I say professional, it just means that you're treating it like a business. So don't think you have to be professional to quit your job. It just means you're treating it like a business. Stocks don't wear out, which is the single biggest reason. Again, if you're a regular subscriber to the channel, why I recommend you trade stocks that have a lot of liquidity. And for me, that means it trades an average of 2 million shares per day. That means that there's enough institutional activity where I have a chance to make money on a regular basis if those stocks are in play, if they're being bought, if they're being sold, they're active. Very hard to do that in stocks that are not that active. So it's important that you're in the right stocks. But here's the key. You'd only need 3 to 5 stocks to trade over and over again to make a really good monthly income, to make a really good extra monthly money. You don't need to be trading stocks you've never heard of before. Maybe you watch them for a little bit and you dip your toes into it to get a feel for how the stocks trade, and then you add them to your universe. Maybe they add to your list of 3 to 5 to 10 stocks. But it's very difficult to trade a new stock today, and another new stock tomorrow, and another stock tomorrow. You don't know the stock well enough. You don't know how it moves on a regular basis. You don't know, does it pull back in 3 seconds? Does it pull back in 3 days? You need to know those things. And you'll know those better by watching the stocks, trading 100 shares in the stocks, and then starting to scale up your share size as you prove to yourself that you can actually manage risk in those stocks. So we're going to go over a bunch of charts, and we're going to talk about when was the right time to buy, when was the wrong time to buy. And most importantly, I want to discuss, before we even get into those charts, please do not average into bad positions. It's just, I understand dollar cost averaging. I understand how that's been around for a long time. I don't recommend it. I absolutely don't recommend it. If you are talking about a long-term investment that you plan on holding for years, I'm sure you could build an argument for that. But let me ask you a question. What if you were a few months away from retiring? What if you're a year away from retiring? And let's say what's going on in the market right now, literally right now with the pandemic, starts to go down and things start to get worse. And you keep averaging into your position and the market doesn't come back, and you keep averaging into your position. And now all of a sudden you're 3 months away from retiring, 18 months later or a year later, the market hasn't come back and your retirement account's wiped out because somebody told you to keep averaging into a position that wasn't working. Don't do that. Scale out or get out and look for a spot to get in. I'd much rather see you lower your risk until a trade is working. You only want to add to trades that are working. You do not want to add to trades that are not working. Say it again with me. Be smart. Do not add to losing trades. It will wipe you out. One trade that doesn't come back will wipe you out. Let's go to the charts. All right. So what we're going to discuss here today is, should you have been in the trade and whether or not there was an edge. So we're just going to go, we're going to take a look on a daily chart. We're not going to break down the weeklies or anything like that. We're going to talk about when is the right time to buy. So we're actually going to take a look at even little moves like this, where there's little declines. So you can see here, Apple basically went up 1, 2, 3, 4, 5, 6, 7 days in a row. And this is the point where a lot of traders are like, now I need to get in. The stock's definitely going in. I can't miss it. And you buy on the 8th day and it pulls back $20 on you. And you're like, my gosh, what am I doing? And then, yes, it did recover, but can you sit through a $20 decline? Then you have another one here. The stock went from 323 to 353. So the stock rallied $30 and you're all excited about getting involved, and then it pulls back 25. You need to be buying in better circumstances. So again, we could talk about here whether or not the stock actually went solid, parabolic 8 days in a row. Do you want to be the person who's buying after too much confirmation? Or do you want to be the person buying down here where we have what we call a swing low and well bid? It's a lot easier to get involved here after a 5-day pause than to be the person buying after an 8-day rally and sitting through the pain. So there's a lot of circumstances here, but this is an interesting one that I want to pull up. I want to talk about this stock, Boeing, and I want to talk about Lulu. So we'll start with Lulu. You can see here, I drew this box. This is where the box gets drawn. When you look at a longer term trend and the price action breaks the longer term trend, that now establishes a low point for a potential change of trend in the other direction. And then you actually have the high of the move, which actually is kind of like right here, right? So you have the high of the move, you have the low of the move. And now the stock is stuck in a box. So basically from this moment, the stock needs to get out of this window for me to have an edge. But I've seen, and I've gotten emails from people that are buying this stock while it's in the middle of nowhere in a multi-day, multi-week trading range at this point, and now stuck in this much longer trading range. There's no edge here. you're going to end up sitting on this trade, and especially if you did it with options, it's going to expire on you without even having a chance to have made money. And Boeing is a similar situation. Boeing hasn't moved in a while either. And when it does, it moves one day and then consolidates. There's really nothing going on here. If you take a look at the longer picture, the stock is obviously a big part of the American economy with, quote, the amount of jobs that they have and that kind of stuff. But the stock right now does not have an edge. So a lot of these trading losses that you get involved with, a lot of the losses that I'm seeing people have, they're taking much bigger losses because there's no edge in the trade in the first place, or they're waiting too long to be involved in the trade. So again, here, where is your edge? Can you look at that stock and say buyers and sellers are definitely in charge? The answer is no. The answer is no, maybe from one day to the next. And we'll actually take a look at financial stocks as well. Goldman Sachs had a really big day last Friday. This is Monday. Traded higher in the direction of Friday's gap, but where is the edge? Where is the edge in the stock? Right now, you can take a look at the stock and you could clearly say, and we're just doing this off the cuff, but you can see it very clearly, the stock hasn't moved since the beginning of June. So this is over a month worth of trading where it dipped below, but keeps coming back in there. Where is the edge where you could say buyers or sellers are definitely in charge and they've been doing it for a while? There isn't an edge. Now, let's go to another extreme example where there has been a ridiculous edge. This stock has rallied, I think, 12 months in a row, if I'm not mistaken. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months in a row. So is this a good idea? Yes, 100% a good idea. But let's take a look at when you'd be getting involved in the trade. Okay? 1, 2, 3, 4, 5, 6 days in a row. 1, 2, 3, 4, 5, 6 days in a row. The stock has rallied 6 days in a row, and I had people emailing me yesterday that they bought the stock at 215. What are the odds of the stock following through after it already rallied 6 days in a row? I'll tell you flat out and write this down, not very good. Is it a good trade idea? Yes, 100%. It's a solid trade where you can see there's clearly buying going on for a long time. Is it a good idea to buy it after it's already rallied 8 days in a row? No, absolutely not. And we talked about this in our group coaching call last night. This is what you're looking at here. And maybe you're thinking about buying, right? 1, 2, 3, 4, 5 days in a row. Then you have the 6th day. Now, what do you need to see in order to be involved in this stock? What do you need to say that you want this stock is still performing exactly the way I need it to see? You need something that looks like this, something that looks like this, a big green candle that closes near the highs, right? Did you get that? The answer is no. What do you get next? Well, not only is it not a green candle, it's a red candle, and it's what we call indecision because it opened and closed in the same area. So you have indecision and indecision. So you have 1, 2, 3, 4, 5, 6 days in a row. And then you have indecision, indecision. So the 6th day was indecision. The 7th day was more indecision, but even more, you had lower lows and lower highs. The circumstances in this stock changed dramatically in these 2 days because you're not seeing what you want to see, which led to this. So is it shocking this stock sold off? Not really. Was it surprising how hard it sold off? Yeah, it was a big, big decline. Could you have prevented the bigger loss if you sat in the trade yesterday? The answer is yes. You could have prevented it. You could have reduced it. You could have completely eliminated it by not being in the trade in the first place, by not getting involved in the stock after it rallied 6 days in a row, not doing what you wanted it to do on the 7th day, not doing what you needed to see it do on the 8th day. And then when that was happening, you could have reduced your exposure. You could have gotten out of the trade and said, I'm going to reevaluate. Instead, a lot of people don't have those questions. A lot of people don't ask themselves, what do I need to see next? And if I do see it, what do I plan to do? If I don't see it, what do I plan to do? And it's that second part that a lot of people are missing from their trading, which is if it's not doing what I want it to do, how do I manage the position? And unfortunately, a lot of people are getting stuck in trades right now and they're moving against them and they feel like they can't do anything about it. Well, that's horse crap. You can do everything about it. You're choosing not to. If you want to make money on a monthly basis over 1 month, 2 months, 3 months, 4 months, this entire business is about managing risk and then learning how to hold your winners. Managing the downside, being okay with trades not working out, and then getting back into those positions. It's incredibly, incredibly easier than most people are making it out to be. It's really just a question of making some different decisions, but having the right questions to make those decisions easier. So if you have any questions, this is a big video today because a lot of people messaged me and emailed me in reference to what do I do now. And hopefully today you have some questions that you can ask yourself, how do I manage this the next time? Because some people are stuck in trades right now and they're hoping stocks come back today, which they might. The futures are up a little bit right now, but you don't want to be hoping. You want to be in control. You want to be the reason that you make money. So anyway, I hope you find these videos helpful. Definitely click down and subscribe to the channel. If you have any questions, absolutely leave the feedback below. And if you want to learn more about how other traders are doing in the boot camp, find out how they find their investment to be. I think you'll be pretty surprised. Have a great day, everybody.